Now, in this segment of our lecture, we're going to talk about estimating bad debt expense. So we already went through our journal entries to record bad debt expense and write-offs. Now we're going to learn about the two different ways to estimate bad debt expense. And this is very easy to do, but students tend to get tripped up on this all the time. So you really want to pay good attention to what we're about to go over. So the bad debt expense is recorded at the end of the period. We need to make an estimate because we don't know who those deadbeats are at the time of the sale. And there's two methods we can do our estimations. One is a percentage of total credit sales, and the other is using the aging method. Both are acceptable under GAAP and widely used. The percentage of credit sales method is simpler to apply, but the aging method is more accurate. Most companies will use the simpler method on a weekly or monthly basis, and the more accurate method on a monthly or quarterly basis to check the accuracy of their earlier estimates. So a lot of times companies would use both methods. They're really easy to use, and I'm going to set you up with the steps right here on this slide. So with the percentage of sales method, the first step is to calculate bad debt expense. And to do that, we're going to take a percentage uncollectible, which will be based on past history. In our case, it'll be just given to us, times credit sales. And then step 2 would be calculate the ending allowance balance. And to do that, we're going to use the allowance formula we went over in our last segment. Beginning allowance plus bad debt expense minus write-offs equals ending allowance. So in step 1, we get BDE. That BDE number moves on into step 2 right here to allow us to solve for our ending allowance in the second step. The aging method I'll put at the top because I don't have room at the bottom is going to involve the same 2 steps but in the opposite order. Step 1 is going to be to calculate our ending allowance, and to do that we're going to take a percent uncollectible that'll be provided times accounts receivable. And then step 2 is going to be calculate BDE, and we're going to use the allowance formula, beginning allowance plus bad debt expense minus write-offs equals the ending allowance. But notice step 1 we got ending allowance, which carries down to step 2, and we'll solve for the BDE in step 2. So the methods are very similar. They involve the same 2 steps, but the steps are done in the opposite order. So that's extremely important to remember. If you apply these steps, this process will be extremely easy to do. But if you mess them up, you're going to get them all wrong. So please make sure you do a lot of practice on this in preparing for quizzes and exams. So let's go through the easier method, the percentage of credit sales method. Step 1, as I laid out on the last slide, is to calculate bad debt expense. So to calculate bad debt expense using the percentage of sales method, tells you what to do, right? In the name of the method, you take a percentage of sales. So you'd be given a percentage in a problem. It would be based in reality on the historical trends of bad debts for the company, and you multiply that by credit sales. That gets you your bad debt expense for the period. And then to record this, we would debit bad debt expense, which we learned in a previous segment, and we would credit the allowance by that amount. So it doesn't matter what method we use, the entry is going to be the same. The amount might be different, but the journal entry to record bad debts is always the same. Debit bad debts and credit the allowance. So that amount would be our bad debt expense. 1 step and we're done. We have bad debt expense. If that's all the question wants, we're done. 15,000 is bad debt expense. If instead the question is asking us for what the ending allowance would be, we would need to know the beginning allowance and any write-offs. So it says that the beginning balance of the allowance for 2018 would be the ending balance from the previous period. So they would have to give us that number, which is 51,180. And then write-offs were 17,420. So they show it to you done in this T account at the bottom. I'm going to show it to you using step 2. The formula for the allowance, beginning allowance plus BDE minus write-offs equals the ending allowance, which is really done for us right here. The beginning allowance would have to be given in the problem, 51,180. The BDE we just calculated. It's that 15,000 from step 1. Write-offs also have to be given, 17,420. And that would get us our ending allowance, which is 48,760. So that's how you apply the two-step method that I went over a few minutes ago. With the aging method, we're going to do what's called an aging schedule, which basically breaks up our receivable by age. So you could see we're breaking it up by not yet due, up to 90 days overdue, and over 90 days. The idea behind this is the older the receivable is, the less likely we are to collect it, which is why the uncollectible percentages are going up. The older it is, the less likely we are to collect it. We would have to give you this aging information as well as the estimated percentages, and then all you have to do is the math. So you take, in step 1, according to my formula, you're going to take the accounts receivable times the uncollectible percentages, and because there's multiple categories by age, you then add them together to get the ending allowance, which is 48,760. Step 2 would be to get the ending allowance, and to get the ending allowance, we're going to take the beginning allowance, which would have to be given, plus BDE minus write-offs to get the ending allowance. The ending allowance, we figured out from step 1, we want it to be 48,760. The beginning is 51,180. It would have to be provided. BDE is X. It's what we're going to be solving for. And then the write-offs would have to be given, and here there's 17,420. And then we're going to use our formula here, do a little algebra, and solve for X, and X would, I don't know why that keeps happening, X would represent our bad debt expense adjustment, which comes out to be 15,000. Now, the book fudged around with the numbers to make sure it came out to the same number. But in reality, using the percentage of sales method and the aging method, we may very well get a different bad debt expense amount, and that's okay. Remember, these are estimates. So the key here is to remember the various steps. With the aging method, step 1, we get the ending allowance, and if the question asks you for that, you're done. If not, you go to step 2 and calculate bad debt expense. The key is reading the problems that you're asked to complete. You don't want to go too far, and that's what students do, and they mess themselves up. They get the 48,760, but then they see the beginning allowance number, and they incorporate that in to get an answer of 15 grand like we did here, and they circle that. Well, if I asked you for ending allowance, the answer is 48,760, not 15,000. So you don't want to go too far. You have to pay attention and follow your steps. With the percentage of sales method, step 1 gets us BDE, step 2, ending allowance. With the aging method, step 1 gets us the ending allowance, step 2 gets us the BDE. So they're very similar, but they're opposites, and it's important to remember those steps so you don't make mistakes, and read the question carefully so you know what you're being asked for. Are you being asked to calculate bad debt expense, or are you being asked to calculate the ending allowance? So to summarize, when we estimate bad debts, we could use one of two methods. When we use the percentage of credit sales method, we're using that to directly compute the amount of bad debts that go on the income statement. So one way to remember what you get is the percentage of sales method gives you an income statement item because it's using an income statement item. So we're taking a percentage of sales, which is on the income statement, and in turn we get bad debt expense, which is also on the income statement. For the aging, we're estimating the ending balance in the allowance, which is a balance sheet account. So we're using a balance sheet item, account receivable. We take a percentage uncollectible times account receivable, and we get a balance sheet answer, the ending allowance. Then we have to go to step 2 if we want to calculate the amount of bad debt expense that shows up on our income statement. It's important to note that these are estimates, so if the amount written off differs than the amount we recorded as bad debts, we're just going to adjust our bad debt calculation in the next period to be higher or lower to make up for the error. We don't go back and change our estimates. Our estimates are what they are. They're estimates. They're not going to be perfect. As we move forward and we see, ooh, we underestimated bad debts, we got more deadbeats than we thought, we'll increase our uncollectible percentages in future periods. If instead we figure, oh, look, we actually have fewer deadbeats than we anticipated, then we can lower our uncollectible percentage in future periods. So the financial values from the prior annual accounting periods are not changed. We just change those estimates on a prospective basis, which is a fancy way of saying moving forward. We don't go back. Because this can be tricky for students, I thought it would be beneficial to include a few multiple choice practice problems on the concepts in the video. So we'll start with this first one. Superior Company has provided you with the following information before any year-end adjustments. What's the estimated bad debt expense using the percentage of credit sales method? So the first step when dealing with any of these bad debt expense problems is to figure out what method the company is using. So here, hopefully, you could see it's very clear we're using the percentage of credit sales method. So then what I'm going to do is I'm going to write percentage of credit sales. Then I'm going to do my 2 steps. Step 1, BDE. Step 2, ending allowance. So you figure out what method the company is using, whip out your 2 steps. Then what is the question asking you for? It wants bad debt expense, so I circle bad debt expense. That's going to remind me to stop at step 1. So what do? Well, to get bad debt expense, I take the percentage uncollectible, which is 2%, and then I multiply by the net credit sales, which is $120,000. That's going to get me $2,400, which is the answer. Done. Now, if I wanted ending allowance, I could get it using the formula beginning allowance plus bad debt expense minus write-offs equals ending allowance. And the beginning allowance is given in the problem $300. It has a credit balance because the allowance, remember, is a contra account, so it should have a normal credit balance because assets have a normal debit and contras are opposite. Then we would add the bad debt expense of $2,400 in. There's no write-offs mentioned, so we can assume those are 0, and we get $2,700. Now, I didn't have to go to step 2. The reason I did is I wanted to make a point. $2,700 is an option, so it's really easy to get sucked in by that drug dealer answer, and you always should say no to drugs. So here we wanted bad debt expense. We should have stopped at step 1, would have saved time, got $2,400, got the answer, and been done. But you can see if you move on and say, oh, I got to use all the numbers that are here, you're going to end up making an error, and you're going to pick the wrong number. So this is the process that we're going to go through on these practice problems each and every time, and each and every time we'll get it right as a result. So let's try this one. On December 31, James has an account receivable balance of $324. Before any adjustments, the allowance had an $1,100 credit balance, and they prepared the following aging, and it wants bad debt expense. So step 1, what method are we using? If we're using an aging schedule, the method is the aging. What are the 2 steps? Step 1 gets ending allowance. Step 2 gets BDE. What does it want? It wants BDE, so that's the one we're after. To do step 1, we're going to take our uncollectible percentage times AR. I'll do it up here. So we have 157 times 1% is 1570. We have 89,000 times 2%. Need my calculator for that one. Which gives me 1780. We got 51 times 4%. Gives me 2040. And we got 27,000 times 21%, which gives me 5670. Then I add those together to get my total ending allowance. That comes out to 11,060. Now I might get excited in circle A, but I would be wrong because it didn't ask for ending allowance. That's what I just got. It wants bad debt expense. So I need to move step 2, beginning allowance plus bad debt expense minus write-offs equals ending allowance. The ending allowance is the 11,060 we just calculated. The beginning allowance is the 1,100 credit balance noted in the problem. BDE I don't know. Write-offs aren't mentioned, so we can assume there's 0. And then we solve for X. And we find out that X equals 9960. So the answer to this one is the 9960 because I wanted bad debt expense. So this is why students struggle with this, because both answers are there. You got to know what method is the company using, what are the steps of that method, and then what does the question want. Follow my process, my friends, and you shall succeed. Let's do another one. Using the percentage of sales method, the estimated total uncollectibles are 6622. The allowance prior to adjustment has a debit balance of 2935, and the account receivable is 44,420. The amount of the adjusted entry for uncollectible account expense is. So again, what method does the company use? Percentage of sales. What are the 2 steps? Step 1 gets me BDE. Step 2 gets me ending allowance. What does it want? It wants uncollectible accounts expense, which is a synonym for bad debt expense. In this method, we would take a percent uncollectible times the credit sales. What messes students up on a question like this is we've done the work for you. We said we used the percentage of sales method and we got total uncollectibles to be 6622. That means that this came out to 6622. We did the work for you. We used that method. If we got 6622, we got bad debt expense because that's what the percentage of sales method does. It gets you bad debt expense. If it were the aging method and we got 6622, it would be the ending allowance because that's what the aging method gets you first. So because that's all I wanted for this problem, that is the answer. No work needed. Just understanding the concept gets me the answer. I don't even need to calculate a thing. If we wanted ending allowance, we would move on to step 2, beginning allowance plus bad debt expense minus write-offs equals ending. What's tricky about this question, though it wasn't relevant based on what was asked, is that we have a debit balance in our allowance. The allowance should have a credit balance, so if it's debit, it means it's negative. We must have underestimated our bad debts in previous periods, and then because more deadbeats showed up, we have a negative allowance balance to start. Then we would add our bad debt expense of 6622, which comes from step 1. Write-offs again aren't mentioned, so we can assume those are 0. And then we end up with 6622 plus negative 2935, which is 3687, which you see is also a drug dealer answer. It's there for you. So it's really important to remember to follow these steps and to know when to stop. So this question was really easy. The answer was right in the problem, but this is the type of question that would trouble students most because they overcomplicate it. They think we need to use all the numbers that are there, and you don't. Why do we give you extra information? Well, from a student's perspective, it's to screw you over. From our perspective, it's in the real world. You'll be faced with all sorts of data. You need to determine what's relevant to the decision and what's not. Last question that we'll do, An aging of receivable indicates the amount uncollectible is 3410. The allowance prior to the adjustment had a credit balance of 500. The account receivable is 44820. What's the amount of the adjusting entry for uncollectible accounts? So the method the company is using is aging. So aging. Step 1 gets me the ending allowance. Step 2 gets me BDE. What does the question want? The adjusting entry for uncollectible accounts? Well, the adjusting entry is the bad debt expense, so it wants step 2. It did the work for us. It said they did the aging and they got 3410 as uncollectibles. That means the 3410 is the ending allowance. And if the question wanted that, that would be the answer. It's here. Might be tempting, but it's not right because this question wants BDE, so you need to move to step 2. Step 2 would take the beginning allowance plus BDE minus write-offs equals the ending allowance. The ending allowance is at 3410. They did the work for us. They used the aging method and got it. So that means that's the ending allowance because step 1 in the aging gets you ending allowance. BDE is what we're looking for. The beginning allowance is 500. It's a credit balance, which means it's positive. BDE, I don't know. Write-offs are 0 because they're not mentioned. And then I can solve, and x equals 2910, and that would be the right answer. So it's extremely important you follow these steps. The last thing I'll mention is a couple of vocab things. BDE. I don't know why it's doing that. Tell you I can't win here. BDE is also known as uncollectible accounts expense, and it's also referred to as the adjustment for uncollectible accounts. The ending allowance would also be known as the allowance balance after adjustment, because after we make the adjustment, we'll get our ending allowance. And then the beginning allowance would be the allowance balance before adjustment. So don't let the wording mess you up. So hopefully that'll help you in approaching these problems in the appropriate way. If you follow the steps and do it exactly as I laid out for you, you should be able to get all these questions right. It's extremely important that you try them on your own, obviously, because it's one thing to watch me do them and see, oh yeah, that looks easy, and it's another thing to actually apply it and follow through yourself. So please make sure you do that and use the additional practice problems that are on Connect and Canvas.